In this video, I'm going to tell you something that every stock index and stock option trader should know about. What a former hedge fund analyst has called a pattern of strikingly suspicious overnight and intraday returns. What is he talking about? Let's have a look. Bruce Knutson is a former analyst with hedge fund DE Shaw, and he has written for years about this pattern. The world's major stock indices display a mysterious, decades-long, strikingly suspicious pattern of overnight and intraday returns. So what is he talking about, and what can we do about it? Well, I've taken the example of the SPY ETF, which tracks the S&P 500 over the past 22 years, and I have compared intraday gains or day gains achieved when the stock market is open between 9:30 a.m. and 4 p.m. Eastern, and the other times, which are overnight gains. And you can see there is a huge difference between the two. The same pattern is there in the QQQ, except even more pronounced. You can see here there is an enormous difference over the past 22 years between intraday gains, which have actually been negative, and overnight gains. In case you're wondering, is this just a historical phenomenon or has it been arbitraged out of the market? Well, let's have a look at the past 6 months. And you can see here that the pattern is still there. In fact, it has become more pronounced during the recent volatility that had occurred at the start of January 2022. The pattern reasserted itself. Exactly the same thing with the QQQ. You can see here the pattern reasserting itself and a huge 11 percentage points difference. And in fact, day gains again have fallen faster than overnight gains. What can you as a trader do about this? Well, firstly, knowledge is power. It's always good to know about these things and be aware of them. Here are a few of my thoughts. Holding time is a big factor in a trading strategy and can make a big difference in terms of profitability. Test a range of different holding periods. Test 10 days, 20 days and 50 days and compare the difference. You'll get more overnight gains the longer you hold a position. Entry time of day is significant. In a trade informed backtest model, there are two options. You can model entering a trade at the closing price and the opening price. There is often a big difference between this simple change. Make sure you're tested and understand which is better for you. And finally, for day traders, don't always assume that overnight risk is negative. In some situations, the overnight risk is skewed to the upside. Make sure you have tested and you understand which is best for you. This has been Mark from TradeInform.com. If you like this video, please hit that like button. And if you want to know how to analyze your own trading strategies, please go to TradeInform.com.